Okay, let's break down the retail sales number that's coming out at 8:30 in about an hour and a half. And let's talk about the possible market reaction to that report. So far, the pattern is highly consistent, right? It's bounce, drop, bounce, drop, and now we're in the process of another bounce. So the next, logically, is a drop. But to help you understand how can all this be put together as a trade, so let's glance real quick at what has transpired over the course of last few days. Basically, this was a reaction at 8:30 to the inflation number. Well, if the inflation number is higher, considering that the retail sales number comprises of many goods and services that people are buying at elevated prices, then by definition, retail sales number should be higher. So the higher the inflation, the higher the retail sales number should be, unless the demand just completely drops off. So given the fact that, assuming the demand is steady or it's not dropping off the cliff, and considering the inflation number we've got right here, which caused this huge market reaction, and guys, I can show you, man, we piled up all of our traders ahead of that move. So, and I don't want you to miss this one. This may not be as big of a move as this, but considering that it's probably a 90% overwhelming evidence that the retail sales number, unless it's fluffed, right, is going to be stronger. And the reason it's going to be stronger because Biden needs for this number in the news to look strong, so he can say, he can continue with the rhetoric that this bullshit economy is strong. So he needs a strong retail number for that reason. Any numbers we're getting from here till fucking elections, okay, they're gonna be fluff. They're not gonna be real numbers, okay? But as far as Biden concerned, it's in his interest to make sure that the retail sales number is strong. So if the number is strong, it's basically a reiteration of what just happened on Tuesday. Okay, now the actual inflation report clearly is a more of an important data point than the retail sales number, but the idea is the same. If the retail sales number is strong, why the fuck should Fed lower interest rates? There's no need for it. If the inflation goes higher, okay, why should Fed lower interest rates? So the case that the market has built since the end of October, November last year, it's basically, it's no good, okay? And for that reason, we had such a sharp sell-off. So we can get a parallel, we can get a candle that's gonna look just like this candle at 8:30 sharp today, and it's gonna be very consistent. So it was the top. We've predicted that accurately within points from the top. We've posted some videos saying, hey, this is the top, everything's about to fall off. And since then, it's a bounce, drop, bounce, drop, bounce, drop, bounce, drop, bounce, drop, bounce. And clearly, the next logical thing is a drop. But considering that, even what makes this case stronger is the fact that we're at the same level from where we dropped last time. Now, the crazy part is all this move from here to here, it happened on very, very low volume. Okay, so we got a very, very strong case of a bear divergence. This level, 520, 530, it's a highly shortable area. So going into the 8:30 report, expecting a stronger number, and the market is likely to resemble the move that we have gotten on February 13th. So that's basically in a nutshell, guys. But we got some killer trades outside of this one. And when I talk about the market, I normally show is S&P 500 futures. But guys, everything is synonymous. So for example, if we look at NASDAQ, it's going to be the same thing, right? So you short NASDAQ right here, 17,800. If on the report, right, because the pattern is everything that's been reporting, like even some charts that look bullish, such as yesterday we made a very bullish case for Twilio. Twilio just dumps. First it jumps a little bit and then it dumps. Beats on earnings, beats on the revenues, and then the stock just sells off. So you got a lot of stocks that are reporting earnings today. And look, if you just take a move to scenario as your base and don't try to overcomplicate things, as basically I did yesterday with Twilio, but the chart was just so perfect. At times you're like, man, this is a breakaway chart where charts normally break out to the upside in majority of the cases. So, but overall, guess what? The strategy of a move to shorten the bounce, just stick with that, okay? It doesn't matter what report, what the fuck they're reporting, what are they doing. In 90% of the instances right now, something's gonna bounce and then it's gonna drop. So we got some stocks announcing earnings this morning, guys. I'm gonna post a few videos on those, but look, this is the market of shorting the bounce. So if you see NASDAQ bounce, you short it. There's less and less market participants as on this move, right? So it's a perfect setup for the next leg lower in the market. And so if you see any kind of bounce, it's a short. But again, there is an overwhelming probability that if indeed the number is strong, we're just going to get a big red candle at 8:30. And industrials numbers that are going to come out after that, I mean, you can't fluff that. Industrial production is in the toilet. I mean, every number we've had from every regional manufacturer comes way off. I mean, and to the negative side, it's not good. So basically, the industrial number, if every region that has reported these manufacturing numbers is not doing good and they're missing it by like 300% in some instances from the expected number, then I mean, the overall manufacturing number can't be good. It just makes sense. But you know what? You can expect anything from this fucking administration, right? Because, well, apparently the 2 + 2 sometimes could equal 11 because, you know, you got every company in the world that's fucking laying off people and then the unemployment rate goes lower. Like, you know, that shit doesn't make sense, right? But yet the unemployment report, hey, we got the fucking, it drops from 3.8 to 3.7 when there is hundreds of thousands of people that are being fucking laid off every day right now. So basically, despite of what the fuck the report says, you short the bounce, okay? That's just the summary of this video, guys. The way you trade anything right now, it doesn't matter what the fuck they're reporting, it doesn't matter how the report looks, you catch the bounce and you short it. Okay, so if you look at RTY, which is Russell, I mean, you trade futures on that, so every chart is basically identical. But, okay, inflation hurts the smaller companies the most, right? Because, you know, you got Microsoft that sits on billions of dollars of cash, and you got another smaller company in comparison that may need to go borrow money. So at a high elevated interest rates like we got right now, it makes it difficult for a smaller guy to survive. And that's why on the inflation report, your best trade was not necessarily shorting NASDAQ or shorting S&P 500. Your best trade was shorting /RTY, which is your Russell 2000 index, because smaller companies get hurt the most by inflation. And so we would expect a similar proportion move. I mean, this was a move of almost 4%. I mean, if RTY went just lower just a little bit more right here, they would have to engage a circuit breaker at 5%. They would actually have to ring the bell. And just to put it in reference, they would have to ring the bell and pause the markets for 15 minutes on RTY. The last time that happened was when we predicted the COVID-associated crash. When we saw it in the charts, the shit was just, it was about to collapse. We didn't know it was going to be due to COVID, but you can go back on the channel, review those videos. And so normally what happens, you get some bounces like this that are going to be short-lived. And so this is a great moment to short RTY, utilizing options by basically buying put options on RTY futures. So this is a beautiful bounce. If you look overall on a daily chart, this is going to be represented by like a gap down. And so now the market is trying to close that gap down, and any strength in the retail number is just going to produce a red candle here. So basically what I'm saying is the outcome of today's trading is this gap will not be closed. And this could be your ultimate entry this week to short the market going into next week as well. So 8:30, very critical moment for the market. If you see a bounce, you short it. If you see a drop, you add to your puts. And guys, the market is pretty simple to read. If you just take all the noise out, even if you ignore even ignore all the fucking bullish charts, like the chart of Twilio that we showed you yesterday, like fuck it, it just, calls don't fucking work now, okay? And you certainly don't want to miss the next video where it looks like calls are working on this one stock, but it's about to fall the fuck apart. So you don't want to miss that one either. So guys, be ready. Short the bounce. If you just stay with that, you will beat this market. And guys, if you're wondering, okay, on the 3 trades that I've shown you, right? So we're talking today about the Russell 2000 futures, NASDAQ futures, S&P 500 futures. You can short them utilizing options at 8:30, because most of you, if you don't have your account set up correctly, you're going to be looking at this. And so basically what that means, for those of you that trade on Tuesday, you came in, and by the time the market opened, I mean, it was too late. So you would have been literally missing on the biggest part of the move on Tuesday. So the truth is, you should call 13mmtv.com. You should call 13 Market Moves, talk to a coach here. Make sure you got your account set up so you wouldn't miss out on the biggest part of the drops, which happen before market opens or after market closes, because all of these moves, pre-market or after market, they're associated with these data-driven type catalysts, such as your CPI reports, such as your retail sales numbers, such as your manufacturing numbers, such as, you know, the GDP number in Japan. Japan is in fucking recession, right? And guess what? Shitty GDP number in Japan. Yen is collapsing overnight, right? And just look at this. Japan, holy shit, nothing, right? Look, NKD, /NKD is Japan futures. So basically, fucking nothing. They're in a fucking recession, okay? 3 quarters in a row, GDP drops. It's by a miracle, okay, the GDP in Japan didn't fucking go negative. Which means what? Why is the market is even up? Well, because, well, how are they gonna fucking raise rates when the country's falling apart? You know, so the market is going higher because they're expecting stimulus. But in contrarian view to what's happening in the United States is, okay, you got strong inflation, which means, well, fuck, Fed is in a checkmate. They can't, we told you this was going to be the year when Federal Reserve loses its credibility. It prepped the whole fucking market. They're going to be cutting rates. And now the whole year they're going to be getting them out of the situations with a bunch of fucking excuses of why they're actually not going to cut the rates. So, I mean, it's a big mess. But basically you look at Japan and then you look at the United States. And what's happening in Japan is really poor economic data is driving the market higher in hopes of stimulus. But Biden, he in the States is in a completely different mission. He needs the numbers to appear strong. Okay, if the numbers do show strong, then it ties up the Fed on its agenda to lower rates and fulfill on the promise that they've given the market last year. So this whole rally that we've seen at the end of October, November, December, January now, and now continuing on February, okay, the market literally can wipe out months of those gains within days. I mean, within days, guys, you should be ready for it. If you don't have a solid plan of action, you should call a coach here at 13 Market Moves and make it happen. This is an incredible opportunity, guys. When you see some stupid shit like this, I mean, it's a beauty. So as a short seller, you make money when things drop, markets drop, stocks drop, commodities drop. You know, just don't miss these incredible opportunities. And, you know, like gold, this was a huge trade. But gold, I mean, it's not done dropping, right? So gold bounces. What do? You short it. So simple stuff, guys. Retail numbers, 8:30. Don't miss it. Trade it with a 13 Market Moves coach. Let's roll. Big trading day ahead.